Hi there, welcome to Kneppy Invest. There are over 2,000 companies on the ASX. I think there's like 2,300 or something like that, maybe even smaller than that now. And there has to be a smallest company on the ASX. I have no idea what that company is, but the company I'll be featuring in today's video, Nexion Group, is one of the smallest companies on the ASX. I think it comes in about or between about 2,000 and 2,100. This is a technology company or falls in that space or that sector. And of 240 companies in that sector, Nexion Group comes in at number 227th now in terms of market cap. So this is a small company. Now, just because a company might be small doesn't mean it's uninvestable. In fact, potentially some of the best valued companies might be the smallest companies on the ASX. It's just that the market might be overlooking these companies because Nexion is very close to hitting that really important inflection point of becoming operating cash flow positive, free cash flow positive, and profitable on an ongoing basis. So very close to that point. And I think if it hits that point and shows to the market that it can grow, I think a market cap of around $2 million is awfully cheap for this type of company. Now, when you look at what Nexion Group does, you probably think this is just a dime a dozen company. Many companies doing what Nexion Group does. So I just went to the website just to see what they do or how they explain what they do. And they say they integrate software, compute, storage, network, and cybersecurity to deliver reliable and robust hybrid cloud systems. They also say they are an emerging provider of vertically integrated enterprise asset management solutions using the latest artificial intelligence. So they have included some buzzwords here. So artificial intelligence, machine learning, and digital twin technology. One of the more interesting things about Nexion Group, and maybe it's not interesting, but it's interesting to me, is that Nexion Group's co-founders, Paul Glass and Kevin Reed, and these two dudes were the CEO up until February 2023, have completely left the business. So we have a new group of managers in charge, although the current CEO is just in that role as interim, and he's also an executive director. He might be a non-executive director, but he's a director. So let's have a look at more facts in regards to Nexion Group. The company was founded in 2018 by Paul Glass and Kevin Reed, and then they got shoved out, or maybe they left. Maybe it was a mutual decision. I have no idea. Listed on the ASX 18th of February 2021. So we're talking about 3 years ago. And to be honest with you, the share price has fallen a lot. And that's why the market cap of this company is fairly low. And that interim CEO, he's also the non-executive director or the director or executive director is Peter Christie. And he was put into that role in February 2023. And they did mention they'll be looking for someone capable to fill the ex-CEO and the ex-co-founder. But I didn't see any announcements in regards to the company filling the CEO role. I went to the website and no mention of this interim CEO in their website or on their website, which was interesting to me. Now, at a share price of 1.3 cents with 202 million shares on issue, this company has a market cap of only $2.6 million, which is interesting because it does seem quite low for a company that is on the verge of becoming profitable on a continuous basis. Now, maybe the market is waiting for the company to confirm they can maintain profitability. And the ticker code for this company is NNG. First time I took a look at Nexion Group was the September quarter financial year 23, so a little bit of time ago. And this was an intriguing quarter because even though the company only has receipts in one quarter of 2,000 or $2.3 million, the company was operating cash flow positive in this one quarter. Now you might laugh and say, well, operating cash flow positive $33,000, that's a bit of a joke, but it's positive. Nonetheless, it's positive. It's positive on all accounts. It's positive. It's positive number. Now, cash on hand actually did go down to 1.237 million. That's because even though they're operating cash flow positive, more than likely they're free cash flow negative. So they're still burning through cash. And one of the things I'd be looking for in terms of this company is whether they can grow their revenue or receipts and whether the company can show any scale. So increasing their receipts or revenue at a quicker rate than they're spending. So let's have a look at the most recent December quarter results just to see if they have shown the market or shown me any scale. Now let's have a look at the most recent quarter results for the company, December quarter for financial year 24, about 5 quarters from the first time I took this company. And the first thing I looked at, or will ever look at, is how much receipts have increased. And receipts have increased by a very small amount. Now, unless they haven't decreased, and you might think, well, receipts have increased, and if you look at the operating cash flow, it's positive by 406,000. So possibly the company has seen some scale or shown some scale. However, in section 1.7, government grants and tax incentives, that came to 516,000. And in my opinion, this is just my opinion, government grants and tax incentives don't belong in operating activities. It belongs more in financing activities because that is not the sort of money you generate because of operations. So what I like to do is I take that number away from the operating activities to give a better indication of the cash generated, the true cash flow generated in operations. In actual fact, we get a negative number, negative $110,000, which is not that concerning, but it's still negative. Now, thanks to the government grants and tax incentives, the cash on hand of this company actually grew from 139,000, which is way too small, to 339,000. Now, they more than likely won't get any more government grants and tax incentives in the next few quarters. I'm assuming that's a one-off. And if they still burn through, say, $100,000, $200,000 of cash, they don't show any more scale, that amount of cash is a little bit concerning because the only way they can generate any cash is by generating free cash flow. And if they can't do that, either they have to increase their loans. And at this point in time, they have $4 million in unused financing facilities. And in my opinion, they should not use those financing facilities. But the only other way, if they don't generate cash in the operations and free cash in operations, is by raising capital. So that's what management have to think. If they can't generate cash flow in the company, do we take advantage of these unused financing facilities or do we raise capital? Now, one of the things I always look at for any companies like Nexion Group is receipts or revenue history. I want to see receipts or revenue increasing through time. If you go from when this company listed on the ASX, that March quarter 2021, all the way through to the December quarter 2023, receipts were growing at a really nice rate. They went from $530,000 to $2.7 million. Now, at that point in time, I would have been quite impressed with the growth in receipts. In fact, that was just after, that record quarter was just after I did that initial video. But unfortunately, since then, receipts have not shown any growth. In fact, you could argue receipts are going sideways. Now, nice growth in receipts from the last quarter to this quarter, increased from 1.7 million to 2.4 million, but I need to see receipts get above at least $3 million for me to be satisfied that this company is growing. Now to the chart for Nexion Group, and there are plenty of red flags in regards to this company. A few interesting things about Nexion Group, and maybe one slight green flag. One positive thing I can see in terms of this company's chart. Now, the share price was in a well-defined downtrend from probably when they listed all the way through to the middle of 2023. Share price got down to a low of about, we'll say about 1 cent, or just below 1 cent, so 0.9 cents. That was in June of 2023. But since that low, share price has been going sideways. We did see a pickup in volume in August of last year. The last half of August last year, there was a pickup in volume. And that is probably when, or coincided when the company released their results. And I think maybe the market was expecting some good results from the company. And receipts haven't really grown since then, which is a slight red flag. But the share price hasn't moved, hasn't budged, just going sideways. So what I would do moving forward when it comes to this company is I'll just be waiting for a good financial report from this company. A good quarterly report would be receipts getting above $3 million, company showing a bit of scale, and the company achieving an operating cash flow positive and free cash flow positive without any government grants and tax incentives. And if the company can prove that over a few quarters, and if the company can increase their cash on hand through just generating cash in operations, I think there is an argument that this company is looking pretty cheap at a share price of 1.3 cents and a market cap of 2.6 million. That is all I have for this second look at Nexion Group. If you have any questions, any thoughts about this company, if you are a shareholder of Nexion Group, I'd love to hear what you think about this company. It's a very small company on the ASX, one of the smallest companies on the ASX. But just because it's small doesn't mean there's not an opportunity in there. In fact, you could even argue some of these really small companies can be the best opportunities, particularly if they can grow and become profitable. The last thing I should mention is I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.